Hello guys, welcome to the video. On today's video, I will be delving into trading inside the range mainly. ICT covered this on the recent video. Let's take Friday of last week. So we had daily high, daily low, and see what I like this day is we got a London swing into the London close, and then we dip back. We actually traded inside that range. This is a specific price action that I would like to talk about, because whenever you're trading inside the range, you'll get this sort of price action. It usually stops like that. So this day we shot way over the London lows, but you're not always gonna get that, and you don't want to go in with the mindset of thinking, oh, I'm gonna sell the high of the day, and then it would become a doji, right? So what doji is like, we open, we rise higher and drop way below and close there. So if you're always going in with the mentality of catching this type of moves, you're always gonna be frustrated, because the market more times than not will not match your expectations. So, and wild expectations in trading, they are like a path to the cemetery, because once you are in that path, you're dead. You're probably killing your account because frustrated, emotionally charged, and you probably break your rules because your expectation is not met. I know most of you guys will probably have experienced this thing where you have had high expectations and the market failed to deliver and match that high expectation. You finish that day or that session in profit, but just because you had a way too high expectation going into that session, you overtrade and try to do more than is necessary, trying to match that expectation, and you break your rules, overtrade, take a setup that's not really there, and then by the end of it all, you wake up, your account is 50% down, or worse, it's totally blown. So that's why you have to have low-hanging fruit expectations, bread and butter type of trading where you could pay your bills. And what I like to do on these sort of days is, like I said, all I'm trying to get is, if I think this is high of the day, see this retracement, take it back inside, little fair value gap, then take off 75%, and if there's more, let it run. If not, I don't care. I already got paid. I had low expectations. I took the low-hanging fruit. I paid my bills, and anything else is a surprise. I'm more like, oh my god, I got paid more than I expected. Your dopamine rises, and when your expectation is not met, the dopamine drops, so you're way under the baseline. So this is neuroscience, right? If this is the baseline of you feeling neutral, expectations, when you see a cue to get a reward, your dopamine levels start rising. But when that reward is not gotten, your dopamine levels drop way below the baseline, so it's actually worse. So expectations not being met will make you feel unhappy, but when your expectation is met, you have anticipation, then down, and then it shoots way up. So but if you trained your mind to already, let's say at some point, let's say at this day, you had your expectations going in, and you caught this whole range, you sold the high of the day, you didn't partial out, got the whole range, you expected this to pan out with no plan whatsoever, right? You didn't plan anything for it. It just happened to play out because whatever, you just thought like, oh, this looks really good, it's gonna go to 21,528, and you held it and it went, and your dopamine levels, now you created a hard wiring based on nothingness. So this happens to all of us, right? Most traders, if you have gotten lucky before with no rules, or nothing to support your, no fundamental knowledge to support something that repeats and it's just luck, but you have created actual hard wiring in your brain. So this is why this one happens, because and next time you step on the charts, you see some pattern, your brain starts getting excited, and this is basically what happens repeatedly until you become aware, present, and you will have to be aware. Use your higher faculties to actually weather through, the drop below baseline, and you will have to take your partials, feel bad, let that day pass, and then once you do start doing this again and again, your brain will lower the baseline, and then you will stop feeling down. You stop feeling shitty, for a lack of a better word. You will not feel shitty anymore, and then you reset your baseline. But this takes time, and a lot of us are young, we're impatient, and we never really make it to the side where we have rewired our brain, which is a hard task to do. And not only this, like this example that I've given right here, like we engage in a lot of habits, coffee, social media addiction, other things that really emotionally and chemically charge us. So we really have a long way to go to become disciplined. So all those things matter, right? So it's just not you coming to the charts and figuring out the fair value gap. Just because you see a huge fair value gap right here doesn't mean you'll hold it until that is filled, because you have to have patience. This took 1 to 3 hours to do. This could have taken 5 hours to do. So what are you gonna do then? If you don't have the patience and the discipline to stick to your rules, you'll not do those things. And your ability to stick to rules is determined by, fairly greatly by the way your brain is set up. So you'll have to go and watch some neural brain videos, like Andrew Huberman. Like, I like him. I'll recommend his videos to rewire your brain. So what you do is you try to pick out a day where you see everything line up according to you. I have my own way of figuring out whether the daily high and low is in, but you use whatever ICT has taught you. So on this date, this came, rinsed the previous daily highs, printed doji at the 1 hour. You might think this is something worth taking, liquidity taken, then back into the range, break of structure or whatever. You can go inside this hour, the big hourly range. You could wait for a break of structure, and lesser time frame, you see you go into back inside this order block or whatever, and this go down and target whatever you want, lower time frame fair value gap, whatever, hourly low, whatever your model is. Like, it really doesn't matter, like, but the thing is, I want you to think in a way where you see a model, where you see a daily high form, and if there is enough time on the day, let's say like this day we formed this high at this fair value gap. See, that's a good fair value gap. Then right at the fair value gap, consequential encroachment. At that CE, we closed below the fair value gap. The bodies, they closed below that, and then you say this is London close, a time where the daily high form most of the time, like ICT told y'all. So then what do you do? Like, you see a fair value gap, you say wait for a break of structure, whatever suits you, and then you take it back to the inside of the range, take your partials, or let the rest run. I'm telling you, the people that say partials are for scared traders or unprofitable traders, they don't know the algo, they don't know IPDA functions. IPDA could do a lot of things, and I will be covering those things in the coming videos. Look, I'm still learning how to make videos, so I might have made this very unorganized, but I still think I dropped more gems than whatever YouTube video is out there. Like, this is the number one video I feel like that has ever been made. um and thank you for watching. Catch y'all with the next video.